Hello everyone, good morning, good evening, good afternoon, depending on what part of the world you're watching us from. Today is the 23rd of August. We'll be doing our weekly focused for the 24th through to the 28th of August 2026. First and foremost, we're going to just look at fundamentals before we dive into the technicals. Just to get a feel of what exactly might be happening throughout the week and what we can look out for as the market opens later on tonight. The very first thing we're seeing here on Monday, we do have Treasury Secretary Bessent speaking at around 9 p.m. This is around New York PM session, so we won't actively be in the markets at this point in time. But again, U.S. Treasury Secretary Scott Bessent, he speaks quite frequently, but on a broad range of subjects. Only speeches that have direct market impact are usually listed on the calendar. So this one is one of them, hence the orange folder symbol, as you can see right there, Again, it's the Treasury Secretary's job to communicate the US President's economic policies, and his speeches are often used to signal policy shifts to the public and to foreign governments. So this one might have some impact on the markets tomorrow, also being a Monday, but we'll see what happens. We'll hear what he has to say and try to listen in and get some highlights on exactly what policy changes might be coming our way or proposed or enforced that might actually, and how that actually impacts the markets. In this regard, the strength or the weakening of the dollar. On Tuesday, again, nothing too crazy. August 25th, we do have BOJ, core CPI year on year on the Bank of Japan. We know that the Bank of Japan has been getting involved in trying to control the price movement of the Japanese yen quite a bit. We'll see it on the charts. Some pretty heavy swings have been happening through the past couple of weeks. So we'll have a look at that. They are speaking at around 8 a.m., which is right around New York Open. Just because the previous was about 1.5% for CPI and the forecast is around 1.4%. What will the Bank of Japan decide to do? That will be seen tomorrow. At around 5 p.m., just after New York Open, we do have consumer confidence news that is directly affecting the dollar. Again, orange folder news. Previous consumer confidence was around 90.8, and at this point in time, the forecast is about 90.3 precisely. And consumer confidence, if it comes out actual, being greater than the forecast, being greater than 90.3, then this is good for the US dollar or the currency. Hence, we'll be looking for sells on any USD pairs. If it comes out negative, then the inverse is true, because this then becomes negative for the currency in itself. Again, it's released month on month on the very last Tuesday of the current month, that being Tuesday, August the 25th. And the next release will be next month on September, around 29th or 30th. Again, remember, last Tuesday of every month. And why this one is important for us is because financial confidence is a leading indicator of consumer spending, which accounts for majority of overall economic activity in a sense, right? It is a survey that is done, which is this consumer confidence, is a survey that is done on about 3,000 households in the US, which asks the correspondents to rate the relative level of current and future economic conditions, including, labor activity, business conditions, and just the overall economic situation, and whether they feel like the economy is headed in the right direction. And that survey is important data for us traders, and also just for economic strength. So it'll be coming out on Tuesday after New York Open, around 5 p.m. our local time here. So expect some volatility coming into the markets. On Wednesday, we have some Aussie news at around just after New York Open, right? We have Aussie CPI coming out on that particular day. That is on Wednesday, the 26th of August. Actual being greater than the forecast is good for the currency. We can see that the previous was around negative 0.1, and the forecast is a positive 0.9, which is higher than previous. Year on year, 3.3 is the forecast, previous was 3.8. So again, a mixed bag of negative and positive forecasts here. What is CPI? If you're new, in case you're new here, well, CPI is Consumer Price Index. It is one of the most important inflation-related releases due to its earliness and the broadness of the scope. Again, it measures the change in price of goods and services purchased by consumers. So it's a consumer price index, and it just measures how high or low the prices of goods are relative to current spending power. So then it's a clear measure of inflation in the markets. Consumer prices account for a majority of overall inflation, right? So inflation is important to currency valuation because rising prices lead to the central bank to raise interest rates. So it's directly tied to the increase or decrease of interest rates out of respect for inflation containment mandate, which is the main job of the central bank of any country, is to control inflation. So we'll be looking at any AUD Aussie dollar traders. Wednesday is a big day for you guys, so expect some volatility. We'll see what the technicals are saying about AUD USD. We had some big moves last week. It is trading quite high, and we'll see how we can best position ourselves. Still on Wednesday, 26th of August, New York Open, we have some red folder news with core PCE, price index month on month, and GDP quarter on quarter being released. Focused for PCE is about 0.2, which is a positive against the previous 0.1, and 1.5 is the forecast for GDP quarter on quarter against the previous 1.5. So focused is trying to be a bit neutral. But let's touch on PCE first and see what exactly we are measuring here and what this data is actually talking about. PCE is basically the change in price of goods and services purchased by consumers, excluding food and energy. So again, actual greater than the forecast will be great for the currency. So then we can look for any shorts on any of our USD pairs. But if the news comes out negative, then that is negative for the dollar. Hence, we'll be looking for buys on your GUs, EUs, AUD, USD, AU, and gold as well. It differs from CPI slightly in that it only measures goods and services targeted towards and consumed by individuals. So prices are weighted according to total expenditure per item, which gives important insight into consumer spending behavior. And that's why this metric, PCE, is actually very, very important for us to actually be looking at and measuring on a month-on-month basis, because it gives the Feds or the Federal Reserve a good measure of inflation, just the same way CPI actually does. And inflation is important to currency valuation because rising prices actually can lead to the central bank increasing interest rates just to curb inflation out of respect for their inflation containment mandate. Just the same way CPI is also a good measure of inflation. On the same day, so that is Wednesday. So we're done with Wednesday. On Thursday, we can see that Thursday is kind of an okay day. However, we do have unemployment claims coming out on Thursday. Our previous was at 206K. Our forecast is at 208K. And again, unemployment is orange folder. And this is basically just the number of individuals who filed for unemployment insurance for the first time during the past week. So unemployment claims is very important and crucial. This is an area where we will be anticipating for some volatility in the market. And then it's basically just economic data. How the market reacts to it is that, so if we have an actual that is bigger than the forecast, assuming it comes out bigger than 208K, then that would be good for not good for the currency, sorry. That would be bad for the currency because more people are unemployed. Hence, spending power, purchasing power is low. So more people need to be taken care of by the government. So then that means the weakening of the dollar. But if it's less than the forecast, less than 208K, maybe it's 204 or 203, then we know that that is good for the government because more people are employed, hence purchasing power is going up. That is good for the dollar. Unemployment claims is a big one for Thursday. On Friday, looking at the news and fundamentally, we do have some card news with GDP release month on month. 0.2 is the forecast against 0.3. So GBP card traders or any other card JPY pair or any other card pair, I think you should be looking for setups well before Friday unless you're a news trader. Again, Friday for USD, this is quite the crazy week for us dollar lovers. We do have Chairman Wash speaking on Friday around 5 p.m. after New York Open, 5 p.m. local time, that is. And then we have payrolls revisions, we have consumer sentiment coming out, we have inflation expectations, and then this one is Jackson Hole Symposium. Well, listen, guys, Friday is about to be one hell of a day, okay? So we're going to be seeing a lot of volatility on this particular day. So two things could actually happen. We could see a lot of consolidation that entire day, or we could just see some random spikes, okay? Especially as we come in towards the New York session. So it'll be best to position ourselves early in the day. If you're an intraday trader, position yourself early, get your setups early, at least before New York Open. You're either out of the markets or you've secured a lot of your positions and you're just letting the runners run because there is going to be a lot of volatility on this particular day. Friday, August 28th is a day to look out for. We just might do a live stream of this particular day just to see how the markets are reacting because this is about to be interesting. Let's jump into the technicals now that we have a fundamental understanding of news releases for the week. Quickly on our technical charts here, we can let's start with the dollar index. Dollar index gave us nice bearish momentum for the past couple of weeks, coming off of this 101.5 level, breaking through the 100 level into our 90s level, and we are currently trading at 98.8 approximately. That's been some bearish momentum, which is great. From we can see we're well below the 200 moving average, and we've been breaking on to the downside with slight consolidation around 99, and the 99.4 was one of our key levels. If we broke below that level, then we were looking for big momentum to the downside, and that's exactly what happened with a nice push coming onto the downside. Our 100 and 200 moving averages are way above, showing that increase in momentum towards the downside. Coming into the previous week, then we anticipated to see whether we anticipated this move towards this resistance zone that was printed right there around the 99 level. If we're broke above, then we'd be looking for continuations to the upside and more strengthening of the dollar as buyers step in with some momentum, bringing prices probably towards this area. If we fail, but we failed to break above that level, we can see that resistance was formed right there, and sellers stepped into the market to push the markets slightly lower. If I move into my 1 hour, we can see that this has been a resistance area that price has just failed to break above, with buyers failing to take prices above that region. I'll be waiting to see what Asia session does for us tonight as we open the markets for this particular trading week and see whether the dollar can actually strengthen. We did have some negative economic releases last week that just weakened the dollar slightly, hence that continuation to the downside and failure to break above this zone. So I'll be looking to see what the market does as of tomorrow from an intraday perspective, potentially see if the dollar would continue to weaken or whether we can actually now start pushing above these levels, maybe above the 99, see whether we can hit our moving average, break above it, and then get that momentum to the upside. That is my potential outlook for the strength of the dollar. If we look at Aussie against the dollar, like we said, we've been having a significant rally to the upside with a nice push all the way. We're currently trading at 0.71 zone. That would be our target. Maybe see whether we can actually get ourselves to the 0.73 zone if we're able to break above this supply area right here. I know that sellers will be stepping into the market. Buyers will also be taking their profits. So we anticipate that pullback potentially driving prices slightly lower towards the downside. Where exactly would I be looking for prices to come? If I go down to my 4-hour time frame, we can see that this is that particular range. So that's kind of the demand zone or area that actually initiated our big move to the upside. We can see that that buy program stepped into the market. Buyers aggressively pushed prices well above, leaving that imbalance. Price came back, filled that imbalance, tested our moving averages around the 200 and the 100, pushed onto the upside. Buyers are now strong and buyers are supporting price, pushing price higher. Buyers are supporting price, pushing price higher, and our supply areas are being broken and pierced right through. Nice push to the upside rally with a consolidation and then a continued rally to the upside. That was the projected range all the way to 0.71800. Once we got there, this is that area where potentially buyers might start taking some of their profits. If that starts to happen, then we can anticipate a nice pullback to the downside. We do have this liquidity that's sitting down here, all the way here, with potentially some orders to be induced or areas to be mitigated. Those could be some targets. On my lower time frame, I would potentially now start looking to see whether structure actually shifts to the downside for us to look for those sells to here. But remember, we do have Aussie news that's coming out on let's say the Tuesday or Wednesday. That is red folder news. That is they do have CPI data coming out. So again, if that news is positive for the Aussie or the Australian dollar, then more bullish expectations are imminent. And if the news is negative for the Aussie, then bearish sentiment is to be expected. Where would I look for price to come down to? If I was to look for a trade on this particular pair, I'd be looking for a play out just before news, because news might come in and disrupt and change the state of order flow at this point in time. So I'd be looking for this resistance area, this support area right here at around 0.70. The 0.70 region, 0.0707 area might be a nice area where price might want to come and retest. If we do that before news release, then that would be the area where I'd love to see buyers stepping into the market with our moving average just offering that support, a nice break to the upside with a shift in structure, and we continue buying, targeting still these highs and potentially a break above those highs if news for the Aussie dollar is positive. Euro dollar has also been on a nice bullish run. And again, the negative news that has been coming out throughout the month of August against the dollar is what has been causing a lot of these rallies to the upside. Our end target might be the 1.18 area. That's kind of where I want to see price get to. If we can get through it nice and easy throughout the week. However, we do have a lot of fundamentals coming out this week. So then we know that order flow might be disrupted, but this was a nice area down here around 1.135 where price was just supported and sellers failed to break below this area a couple of times. Price is supported nicely by the 100-hour moving average, and we just kept on pushing to the upside. From an intraday perspective, this is what I'd be looking at. This is what I would be looking at if this is our continued range, right? I'd love to see whether we can actually get to above here, above the 1.17. We can see that 1.17 is a resistance area where price is just failing to break above. And that is the level where I'd love to see at this point in time. Buyers might be taking some profits because we had a nice aggressive push to the upside, leaving all these imbalances here. So then we might want to see whether internal structure will shift to the downside, come back and fill some of those imbalances take on some of those orders and then want to continue on to the upside. That is something we'll have to wait and see how Asia session actually behaves tomorrow as we look for entries or executions in the London session early tomorrow morning. That will be interesting to look at. We can see that our internal on the 1 hour is still in consolidation. We are moving sideways after that big rally with a failure to push to the upside to break any of those levels. Sellers stepped into the market, buyers are taking some of their profits, and we're just stuck within this box right here, within this range right here. So we'd love to see if we can break above. Maybe we can get some momentum that can push us all the way to the 1.177 region. If we do break below, we could want to see price come all the way down here to this previous support around 1.165 and then maybe get supported by the 100 moving average. But with that said, I'd be looking for some aggressive sells to the downside, maybe to come and correct some of these moves that happened last week, all the way to some of these areas around down here, around the 1.15, 1.17 regions before we can now start looking to continue on to the upside. However, this would be the area that I would love to see if we can actually break below that 50% retracement level. Then we can for sure know that we want to continue buying to the downside. If we do stay above this level, then I'd love to see that structure change in terms of state of delivery to the upside, and then we look for continuation buys. Pound dollar is more or less just like EU has been aggressively pushing to the upside. That is also again attributed to the negative news that has been coming out for the dollar in itself. We can see that week on week, buyers have been pushing the market to the upside, with sellers really failing to step in the market and take any control. We're breaking above that 1.3645 region. We might potentially want to see whether price can get us all the way to the 1.37 areas and eventually get us above those 1.39 levels to the upside. That would be interesting to look out for as we get into the new month of September. If the dollar continues to weaken, then we can anticipate from our technicals for price to continue pushing on to the upside. On our 4-hour time frame, we saw a nice push to the upside last week as news came out negative for the dollar. We saw those big moves to the upside with buyers stepping into the market, pushing prices higher, supporting price, with sellers failing to push the markets lower. So our supply areas are being pierced right through, and our demand areas are actually supporting price and holding price higher as we pushed towards the upside. With that said, we had a slight consolidation around 1.36 region, around this area right here, which is a point of interest for me because I'd love to see price get all the way down here, maybe mitigate some of that zone. We saw that sellers actually stepped into the market, pushed price to the downside till around 1.362, and then the buyers aggressively pushed the market right back up. So we can see here that there is no decision on whether to go up or down, and that's kind of how we closed the week, with these two indecision candles, with the buyers and sellers actually fighting around this range on whether to push prices higher or lower. So then that market open will be very interesting to look out for, just to see how Asia session plays out, and then potentially look for some entries around the London session, maybe entries to push us to the upside or entries to push us to the downside. We'll be waiting to see how the market reacts, because as of now, we're just seeing price moving sideways, with buyers taking some of their profits and the sellers failing to actually break below some of these previous support zones. So we know that we can see that buyers are still quite strong. However, if we do come and mitigate this area right here, potentially get an inducement, I'd be waiting to get my confirmations on the lower time frame and maybe see potential to buy or continue buying to the upside, with the targets being around 1.37 area towards the end of the week, with our fundamental drivers potentially giving us a boost and a nice push to the upside. If not, if on an intraday perspective, still I'd be looking to see, I'll be monitoring that level right there, like I just said, and I'll be checking to see whether the sellers are actually giving me a sign that they want to push prices towards the downside. And if they do, then this would be my intraday targets. I'd be looking to see whether price can get back to that 1.36 area. And then this would be a deeper retracement for myself. Those who trade fair value gaps might be looking for price to get all the way down there. Maybe take some orders from that fair value gap right there. But I'd be looking for 1.355 region, maybe have this area hold here. And if it does hold, then I can potentially now start looking for buys, targeting those highs in the long run if price again allows us to get that low. USD CAD, again, a big fundamental week for the dollar. But we also have some CAD news coming out on Wednesday, Thursday, heavy red folder news. So be on the lookout for that just to see what the impact of the news would be. From a technical perspective, however, again, the dollar, like we said, has been weakening. So we can see week on week, we have been printing red candles with sellers pushing price all the way to the downside on USD CAD, breaking below our 100 moving average. Currently headed towards our 200 moving average. We could potentially see some support on the 200. I'd be looking to see whether these areas, we can see that if I'm just to draw, a rectangle here. Just highlight that area. We can see that price has failed to break below these regions for quite some time, around that 1.35 area. A nice touch and an aggressive push to the upside. Can we get all the way down here? Potentially. However, we'll see what the buyers have to say once price gets to 1.37 area. Around that 1.38 is one structural area that we've just broken through. So 1.37, I'd love to see some support potentially and look for those buyers to step into the market, potentially pushing prices higher. But again, we'll see what the market has to offer for us. Again, we're not trying to predict, but we are trying to react off of what we are seeing on our charts. And that's exactly what we'll be doing throughout the week. This is our area from an intraday perspective. We can see that we have been on that nice bearish momentum move towards the downside with the sellers printing aggressive candles towards the downside. Buyers really failing to break above any support areas, break above any resistance areas, as we can see here. So I'd love to see price potentially come all the way to the 1.37, 1.38 region, which is this box right here that I've highlighted, and see whether we can actually get some resistance. If we do get resisted around that area, then I could potentially look for intraday sells towards that 1.374 region as we continue with this bearish momentum on that leg. However, if our internal structure does shift to the upside, then we'll know that if we get confirmations, then we'll know that this leg of price, or this price leg, has been exhausted, and buyers now start printing some nice candles breaking above that region. Then I'd be looking for aggressive momentum push to the upside, targeting maybe that 1.39 region zone before now looking for those continuation sells to the downside with big momentum. Looking at the dollar against the Swiss franc, where are we? From a weekly perspective, we can see that we have been trying to push towards the upside with that slight strengthening of the dollar. But with the weakening dollar last week, we saw a big push to the downside towards that 0.800 level, trying to get towards the 0.79 level, which again failed because buyers then stepped aggressively into the market. Sellers took some of their profits after that big red candle push towards the downside, towards this previous support area, and we just closed right within that zone. So I'll look at it from an intraday perspective, and this is that big move that we saw, that big bearish move that we saw, weakening of the dollar again, and consolidation towards the close of the market. This is our 0.794 region, and as you can see, we did have some previous support around here previously, where the markets just took off once they tested that area, and we failed to actually come back and mitigate this zone once more. And we can see that in the past, around June, this area again was our previous, if I can just get rid of this This area again was a previous resistance that is now turned into support. So failed to mitigate again, price did not reach there. Once price came all the way down, melted right through it. So then this can also be an area, is an area of interest that I'm looking at twofold. One is it could be now an area of support turned resistance. So sellers stepping into the market to push prices lower and reject these buyers from breaking above this zone. Hence, buyers to potentially maybe look for continuations to the downside if buyers continue failing to break above this area. And we can see that sellers are trying to push, but the buyers seem to be trying as much and aggressively to push above that area. If the buyers do successfully break above the area, above that 0.800 level, 0.800 level, then I'll be looking for momentum push to the upside towards this 0.807 and an extreme of 0.81. That just needs a lot of aggression. If anything aggressive actually does happen throughout the week, then that's kind of where we'd potentially end up. Looking at some of our Japanese pairs, Japanese yen pairs, we do have some BOJ news coming out Monday or Tuesday early. And we have seen that the Bank of Japan has come into the markets to, correct the state of the weakening Japanese yen. And we can see that every time they step into the markets, the dollar just bounces back and the yen just continues to weaken in itself. So we'll see what that news actually has in store for us and what the Bank of Japan has in store for us with regard to the strengthening on the weakening of the Japanese yen. However, from a technical perspective, we can see that we did break above that 215 level. We did break above it and we did consolidate here for quite some time. The markets did rally. That was a nice rally with the base around 2.195. We broke above slightly, sellers stepped into the market, and then we had a nice aggressive push to the upside towards that 217 level. And we'd love to see whether we can actually get to 218 and potentially 219 as our extreme target for the week from an intraday perspective. That's kind of what I'd be looking at. Continued weakening of the Japanese yen with the British pound continuing to strengthen and push price higher towards the upside. 217.200 is a key level that we marked out last week with some previous, previous support actually from that area. An anticipated rejection from the area is highly likely just because we did have previous support right there, and it's kind of a key swing zone that has acted as support and resistance in the past, and that is just an area where we could see sellers stepping into the market potentially just to give us a small pullback towards the downside, maybe towards those areas, but maybe not too deep towards 215. I'd love to see GJ just continue on to the upside towards this area. So let's see how the market opens today and what Asia's session has in store for us. When I get to the dollar against the yen, so dollar yen, here we are again. Bank of Japan has interfered with the market, got its hands a bit dirty with trying to, not get the yen weakening too much. Hence, these big swings towards the downside with nice corrective pushes towards the upside. So we can see that nice bullish candles have been printing for the past 2 weeks. Sellers did step into the market slightly, however, failed to break below that 1.589 zone or area, and we could potentially see prices continue on pushing to the upside. Just moving into a lower time frame, we can see on the forward that we have some support here that price has just been failing to break below with some momentum and continuation towards the downside. This would be a nice area if we do get a big break past that 1.579 area or 1.58 region around here, if we break towards the downside with some momentum, these would be my targets at the 1.55 at the 155.34 region. Previous support here were areas where price came in and actually aggressively bounced off of, and we do have our guardrail here at the 1.61 region. If we break with some momentum towards the upside from an intraday perspective, this is my first target around the 1.610 area. That would be where I'd be looking for price to continue on to the upside as we get into the market before any news release actually happens. Looking at the NASDAQ quickly, let's see. So the NASDAQ is currently trading at 29,300. We had this 29,600 region here and the 29,000 as the bottom, the very, very, very bottom. From a higher time frame perspective, we can see that we tried to break below that 27,000 region and buyers stepped in aggressively into the market with a nice big push towards the upside, breaking above 30,000, and then buyers taking some of the profits and price retracing towards that 29,000 region. So let's move into a lower time frame and see what exactly is going on here. I'm just going to delete these. Right, so we can see that price this is that 27,000 push with a nice push to the upside. We had more buying opportunities around 28k, around 28,000, with prices pushing and breaking above our moving averages, meaning now momentum is to the upside with buyers in control. Once we go to that 30,000 resistance zone, we had a retracement with buyers taking some of the profits, hence that retracement, and sellers actually resisting price from moving any further higher, hence our supply is strong. Then we get liquidity grabbed from the downside and then manages to push price above 30,000, but nothing too crazy. We couldn't get above that 30,400 price point, with sellers stepping aggressively into the market. Once we've trapped those early sellers, taken out that liquidity, taken out those early sellers, price then breaking down to 29,600 into 29,100 zone, potentially trying to get us towards that 29,000 flat price point. At this point in time, we are in between the 100 and the 200. Buyers and sellers are fighting to push the market either higher or lower. For myself, from an intraday perspective, I'd be looking for price to potentially give us lower price action, potentially towards that 28,500 level, and then maybe we can make an executive decision to see whether we want to continue with those buys up towards 29,000, targeting above that 30,000 price point. We can see that sellers are in control from an intraday perspective, and that's the momentum I'd like to play. S&P 500. On the weekly, we can see that we have been buying with the big institutions continuing with that buying pressure. Nice big aggressive candle to the upside, and sellers stepped into the market. Some profits were taken off at that 7,800 level, and that's currently where we're at, around 7,600, with a slight retracement from those highs at 7,800. Some liquidity has been taken and been grabbed, with potential for still higher prices towards 7,900. And what I'd be looking for price to do to get that confirmation for us to continue buying is if we can see price continuing to break down towards these areas, maybe around that 7,600 level. That's kind of where I'd love to look for opportunities to now continue buying towards the upside. For now, the sellers are in control of the markets, supporting price and pushing it lower. Buyers are failing to support price, so we can trade on an intraday perspective, look to break below this 200 moving average, which could give us some resistance around 7,600. If we get a nice change in a state of delivery around there, then buyers stepping into the market, then I'd be looking for price to continue pushing towards the upside, targeting these highs at around 7,900 and maybe see whether we can get ourselves all the way to those extremes. That would be a nice buy and a nice play for the week. If we do fail, if this 7,600 region does fail completely and we break onto the downside, then I'd be looking for some momentum, confirmations and push towards these areas. I'd be looking for price to get me all the way to that 7,400 region, potentially as a nice sell trade for the week, and we could potentially close around this area, around these regions, and around that 7,300 being an extreme, but that would be an extreme push towards the downside. Moving on to commodities, gold has been rallying for quite some time with big bullish candles printing on the weekly time frame. We are currently trading at 4,600, which is insane from where we broke off at about 4,000, and we had a nice big rally through the close of last week, which just pushed price. We had an initial rally right here, coming all the way from 4,000, getting ourselves onto that 4,300 to 4,400 region, which was a consolidation for a couple of days. Once we broke out of that consolidation, then we had a nice big rally all the way to the upside, targeting that 4,600 region, breaking above 4,500, which is one of our key levels for the past couple of weeks, and the targets. We wanted to see price get all the way up there. We do have a nice target. We want to see price now get all the way to 4,800 potentially. So if we are to continue holding our bullish bias, then we'd love to see price continue buying all the way up. We could get some retracements coming all the way down. I'd love to see 4,450 or 4,500, that region remaining as a strong support area. So if price was to come retrace down towards 4,500, that might be an area to look for continuation buys. But as of now, we are at 4,600 at our 50% of this particular price leg that I'd love to see play out a projected range. But again, news is coming out this week. We do have some key levels, previous resistance areas. That resistance area right there, we'll be waiting to see whether sellers can actually push us towards the downside and whether they have enough momentum to actually get us going all the way down. If they don't, then I'd be looking for gold to continue pumping towards the upside, especially as negotiations keep on going between the US and Iran. Iran says they want to negotiate and come to the table. But again, we all know negotiations with between Iran and the US are a bit shaky. We know Trump, and he's a strong negotiator. So we'll see whether actually he'll have some terms on the table that Iran would love to take, because that would also affect the price of oil as we are seeing it currently at 87.5. So the oil prices are still going up. We remember last week there was a failed attempt at that negotiation, hence the big push from 84 level to what we have now at 87. Big picture target is around 92 as the negotiations continue dragging on. That is kind of where we're looking for price to go. Again, bullish momentum, slight consolidation, bullish momentum, slight consolidation. Let's see if we can actually get more bullish momentum in this coming week. Bitcoin is one of those things that never ceases to amaze me, just because for the past couple of weeks, Bitcoin has just been consolidating, right? For a very long time, consolidating around 64,000, 65,000, 62,000 as the extreme lows, and 65 as those highs. Let me just take it on the weekly perspective, and you can see that we've just been consolidating around here. And coming into the end of last week, around beginning of last week, in fact, we can see that the Bitcoin just began to rally and pushed on to the upside, breaking above that 75,000 price point from 65,000, which is a bit nuts, in one day, actually 1 or 2 days. And then we got all the way to that 80,000 zone. And we're currently in an interesting area, which is like a retracement channel of sorts. After this big rally, this big leg has actually happened. You can see that big move happening there. Now we are just consolidating because price just can't move on straight up. So what it will be looking to do is two things. One, buyers will be taking some of their profits out of this particular trade, and late buyers would also be a little bit hesitant to want to just jump into the markets. So the prices will just start dwindling, and sellers will also be waiting for signs or confirmations to now step into the market. Some early sellers or aggressive sellers might already start playing that internal pullback of that big move that happened last week. So again, it's an interesting area where we are anticipating for price to just consolidate for some time across this channel that we have here. Maybe see what exactly happens as the week begins. And, you know, it's one of those assets where you just have to be on the lookout for any moves at any time. If I was looking at this particular trade, this is what I'd be looking at. If I get a break above that channel, I'd be looking for price to get all the way to that 80,000 zone, with 85,000 as a big longer term potential target, with price moving on up to the downside, to the upside if we break above 80,000 aggressively. If we break below this particular channel, with sellers now stepping into the market and buyers stepping away, then I'd love to see sellers step into the market, maybe break below 75k. If we break below 75k as our floor, then I'd love to see price come all the way to maybe that 71,000 zone or 70,000 in itself, and then start seeing some support there. Then maybe we can consider making more decisions and taking on more risk to see whether we can target any of those highs. Alright guys, we've come to the end of this video. Leave me comments down below on any other assets or pairs that you would love for us to add onto the watch list, that you'd love us to go through in our weekly analysis. Again, this week we do have an interesting podcast episode with presenter Ali. He'll be sharing some of his gold trading strategies. He's an experienced trader with quite a number of years in the markets under his belt. He does also host two very fantastic podcasts on his channel as presenter Ali and The Mind of a Trader. So do be on the lookout for that. This is a webinar hosted by Sylvia's Traders Lounge on YouTube. I'll be linking her channel link down below. Turn on your post notifications, subscribe to the channel so that you don't miss out on any of these particular webinars, because there is a lot of insight and free educational content for you. Thanks again for watching the video. I'll see you on the next one. Have a beautiful and profitable week. Cheers.